Hi, this is Nick at Mitzi E. Sullivan's office in Decatur, Texas. Thanks so much for tuning in. I'm going to do a quick video tutorial today about purchasing new assets and what that looks like when you finance those assets and how to record the finance agreement or the note payable into your books. So the example that I want to look at today is a tractor purchase. This is something we just made up here, but let's say that my company has purchased a tractor. The total price of the tractor was $10,000, but we only paid $1,200 as a down payment, and we financed $8,800. So how do we add that finance portion of $8,800 to both the fixed asset and the note payable account on our balance sheet? Well, let's go ahead and start by looking at the $1,200 down payment that will come across our bank feed. So as we can see here on our bank feed on June 22nd, we made a purchase of $1,200, and we're saying that this is the down payment for a tractor. So it's pretty simple to code this down payment to your correct asset account. However, I want to go to our chart of accounts and make sure that we have both our asset account that we want to use and our note payable liability account. So let's start by going to accounting and chart of accounts. And if I type in asset, I'm able to see all my asset accounts. I only have a couple here since this is a sample company, and so I want to create a new fixed asset account. So I'm going to do that by clicking new. I'll change my account type to a fixed asset account. Now my detail type, I'm going to say that this is a fixed asset account for machinery and equipment. And now if I want to be more specific, I'm going to title this account Field Equipment, for example. So now I'll hit save and close. So now I've just created a field equipment account where I can record my purchase and total value of that asset. Now, the other account that I want to look at that will be on the balance sheet is notes payable. So I already have a notes payable account, as you can see, and then I also previously created a notes payable tractor. So the same way as I just created that asset account, I also created a liability account where I can record the finance portion of that purchase. So now let's go ahead and go back to the bank feed and we'll view our $1,200 down payment. So we paid A1 rental. Now we want to make sure to code this to our fixed asset account, which we called field equipment. So I'm going to select field equipment. And I'm also going to put in a memo down payment for tractor. And that will be there to help me remember in case for some reason I forget. So I'll click add. And so now if I go to my reports and look at the balance sheet, I have here towards the top assets, and I have my fixed assets. And as you can see under field equipment, I have my $1,200 recorded. So now the next thing I need to do is add that extra $8,800 to that field equipment account, because I currently have a tractor that's worth $10,000, but as you can see here, I've only recorded $1,200. So the easy way to do that in QuickBooks is simply by hitting new and journal entry. Now, when we create a journal entry, we want to go ahead and select it for the date in which the transaction happened or the purchase / finance agreement happened, which was the 22nd. This is journal entry number 1. If you'd like to, you can put your initials. So I could put my initials there to help me remember that I'm the one who created the journal entry. Now, there are 2 accounts where we need to record $8,800. We need to record the fixed asset account portion of that $8,800, and that needs to be offset by the credit balance, which is that note payable tractor account. So let's start by typing in our asset account, which we are calling field equipment. That's going to be offset by our liability account, notes payable. tractor. Now, we want to debit our field equipment $8,800, and we want to credit $8,800 to our note payable account. So this is going to increase our field equipment asset account by $8,800, and it's going to also increase our notes payable account or our liability account by $8,800. If you'd like, you can add a description, so I'll just go ahead and title this Tractor Finance so that I know when I'm looking at my balance sheet what this is, and I'll simply hit Save and Close. And now, when we look at our fixed asset account for field equipment, it's at $10,000. So that is exactly how much our new tractor is worth. And if we scroll down, we can look at our liability account for notes payable. And under this tractor account, here we have the $8,800. So this is the correct way to set up your balance sheet for the finance options, where you are recording that finance portion and adding that as part of the total value of your fixed asset. And then you're also obviously wanting to record the amount financed so that as you make payments in the bank feed, you can code them to the note payable account and you'll reduce that value. So let me go ahead and go to the bank feed and we can look at that. So let's go ahead and say that we are spending this $185 here. Well, actually, here we go. Here is $800. And obviously, this is just an example. So normally, I'm sure your payments would always be the same month to month. But let's go ahead and say that we paid a rental. Our first payment was $800. So what I want to do here is, if this is my payment, my monthly payment on that tractor, on that note payable, I want to go ahead and code that to my notes payable account. So I'm going to code this to notes payable under the tractor, and I'll say first month tractor payment in my memo. And as I add this to my books, let's go look at the report. So we'll look at the balance sheet. And as you can see here, my notes payable has gone from 8,800 to only, I'm sorry, 8,800, yes, to only 8,000. So as you can see, we had our 8,800 as the amount that we financed. And after our first payment, we've deducted $800 from that. And now you can see that we only owe $8,000 on this liability account. So this is the kind of simple way to go ahead and set up your accounts properly when you finance an asset like this. Now, there's one last thing that I'd like to quickly talk about before we end the video, and that would be the way to accrue interest expense. So often people are going to want to record their interest. Sometimes people wait and do it once at the end of the year when they receive that interest information from their lender. Another way that you could do it is by calculating it yourself month to month or quarter to quarter, and you could actually record that interest expense to increase your liability. So let's say that at the end of the year, we received a statement from our bank or from our lender that said throughout the year we paid $400 in interest on this tractor finance agreement. And let's say that we wanted to add that to our outstanding balance that we have here on our balance sheet. Well, what we're going to want to do is another journal entry. So the way this would work is we could actually simply record this to increase the account by hitting plus journal entry. Let's say that this is at the end of 2020, so I'm going to set this for December 31st of 2020. I'll put my initials. I want to record interest expense, which I don't have that account yet, but I can simply create it. Interest expense. This is going to be an expense account. So I'm quickly creating this expense account, which for the sake of time, I'm just going to throw it under detail under, oh, there's interest paid, perfect. And I'm going to save and close. And I want to make sure to use my notes payable account for the tractor. And like we said, we want to say that $400 was our interest expense for the year. So I'm going to debit my interest expense account $400, and I'm going to credit my liability account by $400 for all my expense that I paid on this throughout the year. So now, if I look at this account as of December 31st, 2020, as you can see, I've recorded a payment here, and I've also now recorded expense interest. So that $8,800 was deducted by the payment. Each month, as you code payments to this account, this $8,800 will lower and lower. And then at the end of the year, if I want to go ahead and add my interest expense that I paid, I can go ahead and add it back. And so now I have my correct value for my note payable account. And as you can see, my field equipment is still at $10,000. Even if I jump ahead to December 31st, I have my correct value for my tractor. I hope this video helps. It's just a quick, brief overview of how to record finance notes payable and the fixed asset account. If you have any questions or if there's anything more that I can dive into here, feel free to comment and let me know. I'm happy to help. Thanks so much for tuning in, and have a great day.